Very good. Good morning, everyone. I know a few of you are just connecting to audio, so I'll just wait till everyone is connected. Just waiting for a few more connections to come in. Just a couple more that are just rolling in right now. Very good. Good morning, everyone. Thank you so much for joining us today. We are having our Climate Venture Studio virtual meetup today, and we have some special guests that are joining us from the Canadian Climate Law Initiative. So for those of you that don't know me or haven't met me, my name is Shannon Bard, and I lead the Climate Venture Studio and Entrepreneurship at UBC. I'm assisted today by Belinda Shutter, who is one of our WorkLearn students. She's a coordinator for the Climate Venture Studio, and she just in the last 2 weeks has graduated from UBC. So congratulations to Belen. We're really proud of her. And what we're going to be doing today is we're going to be having a presentation around the topic of opportunities and challenges around climate risks and how we should be considering that in terms of appointing different members and advisors to advisory boards, to boards of directors. Now, generally, the Canadian Climate Law Initiative is actually providing education to existing boards of larger organizations. But we thought it would be very, very helpful to have ventures from our program before you're actually starting to populate your advisory boards and your corporate boards to start thinking about what are these climate opportunities, what are these climate risks, and how would you communicate that to your potential board members? How would you begin having conversations to make sure you're screening individuals along these lines so that you have people that are aligned with you on your vision and on your values around climate, social, and health impacts. And so I wanted to start out just by acknowledging that we're having a virtual event. UBC is on the, the unceded territories and traditional territories of the Musqueam, the Squamish, and the Tsleil-Waututh, but all of you are coming in from different parts of the province and the country. And so one of the things I wanted to sort of reflect on in light of the topic that we're talking about is that there's been over $2 billion of funding that the Canadian government has announced in the last 4 years to focus on climate action in collaboration with Indigenous people. And this is to strengthen the climate plans that we have across the nation to reach both our 2030 targets in the short term and our 2050 targets in the long term. I just saw Josie Osborne speak half an hour ago, and she was reiterating an announcement that came out 10 days ago from BC Hydro. So it's been 15 years since BC Hydro had an open call for clean energy. This is the first one that's come out in a very long time, and there will be more that are going to be coming out. But one of the criteria is that there needs to be a minimum 25% equity by First Nation communities, by Indigenous communities in these projects. They could be solar, they could be tidal, they could be wind. The idea is to generate more clean energy. So this particular call that's coming out could be transformational for Indigenous communities because many of these communities are dependent on imported diesel. And when I say imported to the community. So flown in on DC-8s, brought in on ice roads, brought in on barges, which makes the community really vulnerable when we have climate change and those ice roads aren't forming anymore, which happened last winter. Or the cost of bringing in the diesel is prohibitive. And in fact, for every dollar of diesel that's brought into communities, the remediation from spills will cost $9 for every dollar that's brought in after the fact. So transitioning to clean fuels, clean energy will avoid these kind of pollution issues as well. So there's a lot of other legacy issues that we're going to be able to avoid by moving to and through the economic green transition. So I'm going to now turn it over to Gigi Daw and Marie-Josée Previc, and ask each of them to introduce themselves, and then we'll move on to the presentation. You're welcome to use the question and answer to put in questions. We could have questions as they come up. Please put them in the question and answer. We can keep some for the end. If there's some that are critical that you want clarification during the presentation, Belen can also ask that within the presentation as well. So I'm going to turn it over to our two speakers. Maybe Gigi, we can start with you.
Hey, good. I guess it's good morning to many of you if you're in BC, and good afternoon to those of you who are closer to where we are or where I am, currently in Toronto right now. My name is Gigi Daw, as Shannon had indicated, and I'm on the Canada Climate Law Initiative Advisory Board. But today I'm going to be speaking to you in my capacity as the Vice President of Policy and Research at the Institute of Corporate Directors. And as such, I will be talking about, the focus is going to be on how do you select appropriate board members and work with board members in terms of development of your climate organization. So it's going to be less about climate change and more about really the governance and the building boards and engaging boards overall. So that's what I'll be spending some time on. I'm going to be doing sort of the boring going through board work and building a board. And Marie-Josée is actually going to be doing the color commentary. So she'll be giving you the interesting stories and color commentary about all of this stuff. So I'll let Marie-Josée introduce herself now.
Thanks, Gigi, and hi, everybody. Very happy to be here with you. I am a member of the Canadian Climate Law Initiative governance experts, volunteers that do these presentations for boards, educating them on climate change. I don't think that you need educating on climate change, so it's a welcome, interesting, and different conversation. My background, just to tell you a little bit about where I'm coming from, my background is capital markets. I'm a former sell-side analyst, very much involved in business valuations, fundamental analysis, stock valuations, recommendations, investor relations. I was actually director of investor relations for a publicly listed renewable power company called Innergex, which many of you might be familiar with because they have significant operations in BC in the run-of-river hydro. And came to the sustainability reporting, sustainable investment space about 12 years ago. And so have been working as an advisor and lately as a chief ESG innovation officer for an ESG data management software company. So all about the data collection, measurement, reporting, all of which is underpinned by governance. Governance is the starting point of everything. So happy to be providing a little bit of color commentary to Gigi's very informative content, which is anything but boring and should be top of mind for anybody looking to start, run, or be in a business today. So back to you, Gigi.
Okay, so I'm going to stay on this sort of introductory or first slide, just to basically give you a picture of what what's important here. And as a young company, I'm assuming many of you are young companies, startup companies at this stage, you're going to need board members who understand your business and being climate, but equally important, they need to be able to, you're going to need a board that's able to guide you to the steps toward taking your business forward. So that may include climate experts, but it also will, may require engineers, AI experts, accountants, other groups that you're going to need around the table. So based on where you are and where your business is in its development stage, we're going to talk today about what type of board do you need, how do you evolve within the type of board that you need, and where you're going to go with that. What I want to do first is start with a doodle poll to get a picture of where you are with your board. If you could go to the next slide, please.
Yeah, so I unfortunately had some issues setting it up within Zoom, so I just dropped a link in the chat. If you could all answer this one poll question that we'll have, I will display the results for all of us. It's anonymous and I'll share the results. You can see the slide, correct?
Yeah.
Yes.
Okay.
As people finish the poll, maybe they could just turn their camera on just for a second to flash it on so we can know that people have finished the poll.
Having trouble doing it?
Sorry, I've got so many windows open. I'm just gonna exit the presenter view so I can present it. My apologies. There we go. And let me...
Oh, okay.
There we go.
There.
Okay, so most of you initiated the idea and then considered what you needed to advise you. Some followed your instincts, and your business and advisors would just get in the way, which is about 33%. I think that's interesting. And it doesn't look like anyone brought advisors in immediately. This is actually really interesting and quite helpful in terms of getting a picture of where you are and what, I'll give you a picture of where you are, or where you are, of what, an advisory board or a board overall might do to help you move forward. Marie-Josée, do you have any comments based on the results?
No, I'm just waiting for you to dive a little bit deeper into your presentation to give a bit of commentary.
Okay, so if you could go to the next slide, please, on what is corporate governance. And many of you already know this. Just very quickly, all corporate governance is a framework or structure that's in place for the direction and oversight of your company. So it's something that you've set up to help you in terms of the oversight of the company. It's generally a process that would ensure there's direction, control, oversight, and evaluation of the enterprise, and oversight and evaluation of you and the rest of the management. Corporate governance should bring the means to enhance decision-making process and to create value. That's what you should be getting from it, hopefully. So next slide, and Marie-Josée, feel free to jump in anytime.
Yep, I will.
And again, very quickly, what is good governance? It really is having those checks and balances in place. It's as simple as that. And another key to good governance is having adept oversight to safeguard your interests. You're the owner, you're the entrepreneur here. So you want oversight that's going to safeguard your interests versus getting in the way or not helping move forward. And the word adept in my note here is capitalized because it's really important that you have the right people around the table, that you get people that you need, and they're going to help you move forward in terms of where you're going. And again, I will get more into that as we go forward. And that you do need people who are adept and knowledgeable enough to help prepare you for the next, for your next phase in terms of where your company is going. Next slide. So really, the role of the board is very simple. There are sort of really just four things the board does. One is approve strategy, oversee management, oversee the key risks to the organization, and they're responsible for disclosure and transparency, ensuring that you are disclosing the right information and transparent. What I do want to say with regards to this, approving strategy is just a small piece of what I would expect a good board to do around strategy. I am a firm believer that the board needs to inform and guide the strategy and then approve what management comes up with. It really is, to me, very important that you've got a board that's able to bring in some external views and help determine where you should be going as an organization and work with you as the founders and CEOs in many cases of your organization. And another thing here that's not noted is the board should bring an informed external view to the organization to help guide discussions and decisions. So basically, you want a board who's going to bring in information that you may not have without them, so that you can make appropriate decisions and that they can help you to make appropriate decisions overall. Next slide.
Maybe if I could just jump in here in terms of the role of the board, just to complement all the things that you are saying, Gigi, when it comes specifically to, you know, climate change, and if you're wanting to start a business around climate change, addressing climate change, you know, do you need every board member to have climate expertise? No, not necessarily. And I think there's a difference between what you do and how you do it. And as a business owner, entrepreneur, manager, you have to be cognizant and managing both. So the nature of the work that you do is important. Of course, you want to have board members that understand your business. Do they need to be climate scientists? No, they don't. If they're climate denialists, you wouldn't want them on your board anyway. So, you know, they would self-eliminate. But to Gigi's point, you need a variety of different expertise, because running a business requires different expertise and requires thinking about different things, managing many different things. So it's, you know, it has to be a good balance between the topic or the business that you're in, and then just general good business practice.
And Marie-Josée, I just wanted to add on to that, that distinction between someone actually having technical skills in that particular field around some sort of climate solution, or actually just having the sensibility around the values that these are opportunities and risks that we need to be aware of as members of society. So regardless of what the subject matter is of your venture, these are important things that are happening to society, and to mitigate risks for your business, you need to be aware of them. You need to anticipate them. And one of the challenges that we have with climate change is that in the past, we predicted future behaviors, future conditions based on past behaviors, past conditions. And what we're finding is that changes are happening more rapidly than the historic data sets that we've had. So our predictive models are not aligned with what they would have been 50 years ago. And so that creates a lot more uncertainty. So having people on the board that are aware of this kind of ambiguity, that can manage it and help to mitigate it and think about backup plans is what we're sort of proposing here. So thank you.
And actually, without wanting to derail the conversation, Gigi, so we'll pull it back in shortly, but you know, we could go down this road and have a 1-hour conversation just on that. What kind of skills do you want your board members to have? You need them to be able to think forward, long-term, very long-term, like 5, 10, 15, 20 years, and do scenario planning. A lot of board members today have a lot of difficulty with that. You need to think in systems change. What makes systems change? You need to be willing to do things differently and to do different things. Again, not a lot of people who have been in board positions for a long time, who are the more senior, if you will, or are comfortable doing that. Those are the kinds of skill sets that you need to look for in any board of any company, any business, because all businesses are going to need to be addressing their exposure to climate in some way. But in particular, when you're in a business that's trying to drive this change and be, quote, part of the solution. So yeah, very interesting to underline the different skill sets required. That the past is not useful, is not a useful resource, I guess, or not as useful. Sorry. Back to you, Gigi.
No, and that I think I really like where you're going with this. I think it's really important to consider this stuff. There's having climate expertise, which is really important. As we knew from the global financial crisis, a number of banks had a full board of people who had no banking expertise, which didn't work very well. But at the same time, you need to think about a board that understands resilience. How do you create resilience within an organization? How do you manage risks? How do you look at the other side of risks and look at opportunities? How do you look at crisis? What kinds of crises might hit, and what do you do in a case like that? So all of these skills are really, really important when you're looking at who you bring on. So just wanted to speak a bit about why you need a board and, we've just
Actually, Gigi, just hold on for just a second. Belen's just highlighted that Chang has some questions. Belen, are these questions to hold to the end or ones to ask now? Because unfortunately, I'm not able to see them.
Well,
I'm open to any questions now if people have them. So
sure, we just got a question wondering if what portion, if any, of today's presentation material applies only to startups working in the climate space, or if they apply to all types of startups.
they apply to all types of startups. That in fact, when I did this, I had to go back and redo it thinking about climate, because to me, building a board and creating a board for startups, for small companies, and for, you know, when you're transitioning sometimes to become, you know, a public board, or, you know, the company is just growing, all of those things are very important in terms of moving forward. So
Yeah.
I will be dealing with a lot more than just climate.
I would say it's all kinds of businesses, all levels of businesses. Governance is for any company at any size. There's no too early to start. The sooner the better. Good governance practices are hard to come by, believe it or not. So I would say definitely applies to anybody.
Yeah, yeah. And you know, as noted on the slide here, initially, when you are starting, when you're just getting started, you may just require advisors. And sometimes it's family or it's friends, whoever you can get, basically. But sometimes they're advisors who bring the functional skills that you need to just start and grow your business. So maybe they've got human resource background. They can help you with that. Maybe they've got accounting background and ensure that you're sort of online with that. That basically it's someone that you can call on for advice. But as the company grows, you often need to start to create more of a fiduciary board and really understand more the rigor and systematization of what you need to do, and sort of they would help you to balance that. Advisors and directors can help a company optimize its approach to dealing with complex challenges. And if you can find really great people to help you do that, it will help you move your company further, you know, ahead faster, but also ensure that you're not having the, oh, shouldn't have done it that way, step back kinds of things that you sometimes can run into. And I will suggest a great board, either advisory or fiduciary, and I will talk a bit more about the differences between the two, can make or break the process of you sort of developing and moving forward with your company. A great board to really keep in mind, and it really gets back to the polling question about sort of it's my company, and you know, boards are just going to get in the way. And that may happen, but a great board should, in fact, help you move things forward. They should not be getting in your way, but that does not mean they agree with everything you want to do. A really great board should be able to help you understand where you need to slow down and help you balance what you should be doing with you know, where you may be moving too fast or you may be moving in the wrong direction. And if you can get great people who really are going to disagree with you sometimes, you've really got something that can help move you forward.
Gigi, there's a comment that's come in from Chang, and Chang, I was going to invite you to unmute yourself and ask this question, because it's building on things that Gigi and Marie Jose are talking about.
Sure. So I'm keeping my camera off because I've got a bunch of tissue stuck in my nose. I've got this bleeding nose from taking blood thinners after an arthroscopic ACL. That's way too much information. I had a question related to a comment from Mary Jose about it's never too early to think about and work with governance. We often work with a lot of startups at Entrepreneurship UBC where we see something a little bit different, because some of us believe that maybe at a very early stage, with limited resources and time and money, and a wide range of urgent priorities, sometimes it can feel a little too early to be looking at things like governance. And I was wondering if Mary Jose could expand on that comment. Of course, we all want good governance all the time, but with the practical realities of a startup, maybe there's a bit more balancing that might be appropriate.
Yeah, sure. I'll start, and then curious to hear what Gigi has to say, and if it's the same thing or not. Of course, companies are always resource constrained. Small startups, ventures, small companies, scale-ups, large companies, huge companies are always resource constrained. So I think that the overarching message for me is within your means, with the resources and tools that you have at your disposal at any given point in time. I would just caution against the pushing it back and pushing it back and pushing it back, because it's never the time, and there's always another priority, and usually it's revenue priority. And to get to a point where then you have to play catch up and put things in place retroactively to fix problems that have happened because you didn't have proper governance in place. And it doesn't have to be complicated, and it doesn't have to be expensive. If you have, a group of whatever your advisory, as Gigi was saying, initially it could be family, friends, anybody with expertise who are usually, when in the case of a startup doing this, pro bono, free of charge. So it's not costing you anything. It's really more about developing the habit and the processes of bouncing ideas off, validating, getting the expertise, and having people who, I'm assuming, Gigi, you're going to get into it at some point, but the responsibility of a board, technically, when you get into the more formal mechanisms, is really to the company, right? It's acting in the best interests of the company itself, for the company to survive, prosper, thrive. So it's not self-interested. And I think there's a lot of benefit to that. And, we were talking earlier about, change in the mindset, worldview, change in values, very much about your values. Where do values live? First and foremost, governance. Now, early days, governance can be a role taken on by the management team, right? The leaders of the company. And then at some point, there might be a separation of some of those functions between the management and some other entity. But anyway, I'll stop there. Maybe that provides a little bit of color. And Gigi, curious to hear what you have to say.
Yeah, I don't disagree at all. I think you're absolutely right. I think in the beginning, it can be, you don't want to have a really formal governance process in the beginning. What you want is someone you can call on for advice and a process to do that, and someone who's going to push back a bit on you in terms of where you think you're going to go with something. It's really helpful to have someone say, okay, wait a minute, is that really where you need to go? Or what do you think might be the consequence to that? That's governance. That's a process to help you move the organization forward. As you grow more and as you get more and more complex as an organization, then it's really helpful to have a more formal sort of format of governance that you would put in place. And sometimes you can start by formalizing your advisory board, and that you can bring people on who are really going to bring you to a different level. And then as time goes on, you may need to sort of make it a more formal fiduciary board. Hopefully that helped. Let's go to the next slide. I will be covering some of this later, but please, again, stop as we go through. So we should be on what is the role of the founder with the board. And I'm not going to spend a tremendous amount of time on that, but you have very clear picture of where you want to go with your company and how you want things to work. You have a reason that you started your company. And what the advisory board can do is really help to balance your involvement with their independent perspectives. The only thing that I would suggest that's really important with a founder in terms of having a board, sometimes when you're a founder, it's because you don't like to follow the rules necessarily. Sometimes you don't want to be at an organization where you're having to do what other people have decided, and you've got your own ideas and you want to move forward. And it's really sort of balancing that with other people's thoughts. What I would suggest when you have, an advisory board is make sure you don't fill it with wallflowers. you don't want to fill it with people who are going to agree with everything you want to say and agree with everywhere you want to go. Because the more people challenge you, the more you will grow, the more you will start thinking about, oh, maybe there are different ways of looking at this. They should not in any way be people who get in the way of moving your organization forward, but they should be people who can challenge what your thinking is around the best way to do it. And it's kind of, you know, where you, no matter what you're doing in life, you kind of bounce ideas off people. And it really is, when you start off, an advisor group that's going to help you do that. And that's the relationship with that the founders are going to have with the board.
Mm-hmm.
So,
and Gigi, I wanted to double down on that message that you're expressing around, you want people to feel comfortable giving you contrary advice, so you have more information to be able to make informed decisions, science-based decisions, data-based decisions. Many of us have worked or have known about organizations in which the founders, and these are often larger, more established organizations, surround themselves with yes men. There usually is an intimidating, toxic environment where people are punished for saying their mind. And what that means is that nobody warns the leaders that there's actually a derailment ahead on the track, and they're going to run into that because you get punished for bringing any bad news. What you actually want is people to feel comfortable to bring you warnings before there's actually any consequences that are going to happen, because you can act much earlier. And that would be both with your board, but with your employees and the groups that you're in. It's similar to around those of you that have worked in engineering and health and safety. You reward people for noticing potential risks, because that avoids any health and safety consequences and the financial and the human tolls that come with that. Thank you.
And the thing I'd add with that is Marie-Josée noted earlier that once you get to a fiduciary board, it's no longer self-interest. The interest is in the best interests of the corporation or the company. At this stage, or when you're starting up, when you're brand new, it really is self-interest. It's you thinking about, where do I want to go with this and how do I make this work? And there is a bit more of that in there. But keep in mind, you also own the failure in a case like that. So you own when it doesn't work out overall. So you want to be able to keep that in mind as well in terms of a board. Now, an advisory board does not own the failure in the same way as a fiduciary board does, but we'll get a bit more into that afterwards. Marie-Josée, did you have any comments before we go?
No, I'm good, thanks. That's no.
Okay, next slide. So the board's roles and responsibilities. So there are generally two different types of boards. There's an advisory board, which is a much more informal type of board. And that's sort of who you pull together, as I'd noted, your friends, your family, sometimes someone you know that's an engineer that's going to be able to help you with some stuff, or an accountant or whatever. Sometimes advisory boards are paid, often by some type of share in the company. But the other type of board is fiduciary, and that is a much more formal sort of process that you want to go through. The key with this, in terms of the board's roles and responsibilities, is what type of board you have depends on what the company needs at its development stage. And again, typically in the beginning, you just need advisors. You need someone who's going to help you grow this and move it forward. That may go on for a number of years where you just work with an advisory board. But there may come a point where you say, okay, you know what, we need a more formal structure. We need more information. And that you might move then to a more fiduciary board. Or if you're going to do an IPO, you have to then go with a fiduciary board. So what the key is, do you need sort of overseers or advisors in the beginning? One of the keys, whether it's advisory or fiduciary, that I think is so important is getting the right people. So as I've noted incessantly, you don't want to get people who are in the way of you moving your organization forward and are in the way of you not getting done what you want to do. You need to be able to help the right people so that you can converse with them, so that they can push back on you and say, this is not the route to go, but you can push back on them and say, here's why I want to. And I think that that's really important in terms of moving things forward. And the more you get the right people at the table, the more you can grow and learn as an organization. But the other thing that's really important with both an advisory or a fiduciary board is you want to have people who have the time to commit to helping you. You don't want to find yourself in a situation where I've got a decision to make, and this is really kind of huge at this stage. And I've got 4 board members and they're all busy, or they're all on vacation or golfing, or just not committed to where you need to go. And I can tell you, I'm on a not-for-profit board at this stage, fairly significant not-for-profit board, but having a bit of challenge right now with the commitment of some of the board members. And we recently had a situation where we didn't have quorum to make a fairly significant decision. You never want to find yourself in that situation. You know, that's atypical in this case, but you don't want to find yourself there. So really important that the board recognizes their responsibilities and that they move forward on it. Also, as you move to more fiduciary, the board has more legal responsibilities. That sort of shifts a bit more from you to them, or a shared responsibility, which is kind of nice sometimes. And also compliance, that when it's fiduciary, board members have a very clear picture of what their responsibilities are in terms of what they must comply to as a board, but also the compliance requirements of the company. They should be able to guide you on that. And where do you need to disclose, and what do we need to disclose, and what are the timelines around that? That stuff is all important, and that is a group that can help you out with that.
Gigi, just as a point of fact here, is it fair to say an advisory board doesn't actually have any legal responsibilities?
No, the legal responsibilities ultimately fall to the owner when it's an advisory board. It's not usually that formal. So there is benefit to sort of moving to that fiduciary board responsibility. You lose some decision-making capacity, but you gain a bit more comfort sometimes around legal responsibilities and compliance activities.
And Gigi, one thing I just wanted to add in for those teams that haven't sort of considered boards yet, is that when you go to have your corporate board, you want to be in a position where you have enough finances to be able to offer insurance to cover those board members. Maybe you could address that.
Yeah, there is actually a directors and officers insurance that will need to be in place, and there needs to be funds to be able to do that. Funds to be able to either pay the directors or really have some way of again, you can pay them via shares, which is not uncommon at all with small to mid-sized organizations. But you do need to be able to insure them for their legal liabilities, their legal responsibilities. And a D&O insurance is not my area of expertise per se in terms of what it needs to look like or whatever, but certainly something when you're looking at moving towards a fiduciary board, that's where you do need to sit down with an insurance company and understand, what does this mean? What are they covered for? How much is this going to cost? And around costs, the type of director you're going to get is going to depend on how good your insurance is. There are a lot of directors out there who know the risks to being on a board, and they may be looking at this and say, I'm not coming on your board unless the D&O insurance is in fact at the next level, that it's a bit better than what I'm seeing right now. So really important.
And Chang had a comment. Chang, would you like to unmute and state the comment that you wanted to contribute?
Sure. I was just noting that saying that advisory boards have no legal obligations, full stop, might not be completely accurate. It depends on the type of advisory board, because there are some that are formalized and that include written agreements with the individual advisors, in which case there would be legal, as in contractual obligations in such formal advisory boards. But I think for most advisory boards, they are volunteer.
You're absolutely right. Yeah. Continue, sorry.
Oh, no, that's it. I was just going to say, but in most cases, they are volunteer and there wouldn't be any legal obligation.
Yeah, yeah. I think that's a really important point, that they're not always that there's no legal responsibility. And even when you're paying them with shares or whatever, that there's often there's not really any legal responsibility. But typically, as you become more formalized, you start to create these contracts and start to share responsibility a bit more. So thank you for
so the key is the contract, which brings the legal liability. So whether they would be on an advisory board or working as individual advisors, wouldn't matter. It's the fact that there's a contract, right, that brings the liability.
Yes, it's really about how you set it up overall in terms of how you set it. If your dad and brother are advising you on this, there's probably not going to be a lot of legal liability unless one of them says, if your father has a company himself and is your advisor on yours, and his advice could impact his company, they may choose not to have any type of contractual arrangement or whatever, right? They may choose to keep it as informal as possible, or they may choose to actually have a contract so that they're covered for that. But it is there is a sort of gradient in terms of how formal the responsibilities become. Any comments, Marie-Josée?
No, I'm just looking at time go by, and
yes.
Maybe you should fly through your slides to make sure you get through the content, because it's good content.
Yes, and so we go to the next slide. And we've sort of talked about this. What type of board do I need? Again, determine what it is you need at the stage you're at. When do you need to start formalizing it? How do you formalize it? That's where lawyers can really help. With an advisory board, only the owners can really make decisions in general. So, you sort of own the decisions you're making. Once you get to fiduciary, the board becomes responsible for the best interests of the corporations. So it is, as Marie-Josée said earlier, not your interests, and your interests may differ from the best interests of the organization. So as you move to a more fiduciary board, you actually start to lose more control in terms of decisions. So if you decide you want to merge with another company or acquire another company, in fact, a fiduciary board can kind of say, no, that's not what we believe is right for this company, so not going to support you on it. So those are the things that are important around that.
Having said that, though, Gigi, and not to want to complicate things, but then you start to get into the whole voting structure and who actually owns the company, who has the voting rights on those decisions. But there's a presumption. I guess you're making the assumption that when there's a fiduciary board, the board members represent other interests, and therefore there might be some voting rights associated with that, whether it's their own or somebody else's. But I mean, it's not as if you have a board and therefore you lose control over the decisions of your business. It has everything to do with how the share structure is put in place, which again is a contractual arrangement, which needs to be put in place as part of other contractual arrangements in organizing the company. Is that a fair statement?
Yes, absolutely. Yeah. I mean, and if you even look at a significant organization like a bank, the CEO has significant decision-making capacity. And the arrangement would be that there's going to be decisions they make and decisions that the board makes. But things like sale of the company and stuff like that, it would depend on the contractual arrangement. But overall, the more formalized you become, the less control you have overall in terms of some of those decisions. That doesn't mean if you build the right board, if you build a board that you've got trust in and they have trust in you, that it should not have any implications necessarily, but you are giving up as you move forward with a fiduciary type of board, you are giving up a bit more of that control overall. Is that making sense? Okay, can we go to the next slide? So again, we've already talked a lot about some of this. Advisory boards, you know, typically they may make decisions that are agreed on by the owner, and they just support your decision or help guide your decision, you know, provide advice and guidance overall. And often, you know, when you look at advisory boards, they're chosen for a different type of expertise than maybe when you get in a fiduciary board. Sometimes they're exactly the same, but just keeping in mind, when you bring on an advisory board, you may want someone who's going to be able to guide you around expertise you don't have. You also may want someone who's going to be able to guide you in terms of exactly where you're going. If you are looking for some type of technology solution to climate change, maybe you want a technology expert in climate change that's going to guide you. So, you know, they really are there to advise, guide, and help you move things forward. On to the next slide. I'm sort of rushing through these because I feel like we've talked about it a bit. Fiduciary boards, often similar function, depending on how you used your advisory board, but fiduciary boards typically have legal duties. If you look at a company that's listed, that's you know, responsible under the Canadian Business Corporations Act, there are requirements that the board act honestly and in good faith to the organization. And key is that view to the best interests of the corporation. And that is sometimes where there is a difference from the advisory. Their responsibility is owed to the corporation. So any decisions that are being made, they have to weigh it against, is this right for this company? Is this right for where the company is going? Versus specifically only looking at the best interests of a particular shareholder or shareholders, particular interests of creditors or employees, including the founder in some cases. So it's important to keep in mind in a case like that, their responsibility is owed to the corporation. You know, a great example, if you get someone like Sam Altman, who was seeking 7 trillion, you know, for enough chips for AI. And that was sort of his reasoning for going forward with the 7 trillion that he wanted to earn. And specialists have basically said that that's not necessarily, if he's going after $7 trillion, not what he should be going after it for. They, you know, were suggesting he should be looking more at innovation for AI processors, which would be more important. Well, the board really needs to measure all of that and consider it in terms of what are other specialists saying? What do we know? What is the CEO saying? And really then weigh it against what is in the best interests of this corporation or of this company overall. I'm skipping through some stuff. So, okay. One of the things to keep in mind with even fiduciary board, they should still be advisors to you. They're not just there for compliance and complying with the laws and complying with the rules. They should still be there at the table. A good board of a major bank, of an oil and gas company, of a, you know, significant organization needs to be there to advise you. They need to understand the business. They need to be able to understand the role they're expected to play. They are coming in with this external information, external advice that they should be bringing to you. And they need to be willing to adapt their governance practices to the needs of the business. And, you know, there's nothing worse than, as people joke about someone who's just finished a governance course and they come in and they're all guns a-blazing about this is the way we're supposed to do governance. And that is true. There are good practices and not so great practices, but they have to be able to adapt that to the needs of the business overall. One of the things I think that's really important around fiduciary boards is for decisions that they're making, particularly significant decisions, they need to engage in a reasoned analysis of it. So if you decide you want to, build, you know, $7 trillion to go out after $7 trillion to do something with your business. And I'm sure all of you are after $7 trillion at this stage. They need to engage in a reasoned analysis. They need to speak to other experts. They need to understand why you're looking at this. They need to understand the issues before they make the decision and help you to make the decision. And that gets back to something that in the courts referred to as a business judgment rule. Should a decision like that be made and the company blows up or has a significant issue as a result of that, a judge is not going to question the decision that the board made if they can determine, if they can see that they made a reasoned analysis to make that decision. They won't question what the decision actually was. So really important around legal responsibilities there. Marie-Josée, anything to add to that, or are there any questions about that?
No questions, and no, I will let you
okay,
continue.
On to the next slide, building your board and how many directors. And again, you know, the key message, there is no perfect size board. If you become, if you end up listing with securities, if you become a listed company with a securities association, Toronto Stock Exchange or something, that then there may be some legal requirements. And in most jurisdictions, there is a minimum number of board members you can have, generally 3, but not always. You get large listed companies, 8 to 12 directors is usually what's considered very good. And boy, that's a change from when I started in governance 20 years ago. The bank board still had, 25 directors on them. And we've really cut that down in terms of what's most effective. Small to mid-sized companies often just have 4 to 6 directors. You don't want a great big board, and that will get in the way. It is considered leading practice. Really think ahead of time. What is the optimal size of the board of directors based on our unique circumstances, and really thinking about that before you end up being stuck with a great big board that's not necessarily going to be helpful to you. You do want to have enough that you can have meetings and have quorum. So sometimes when you only have 3 and quorum would be 2, you want to make sure you're not in that situation. So
yeah. Pulling back a bit and maybe making some commentary that applies both to advisories, earlier startup, earlier companies to more, and as well as more mature ones. The criteria of independence, the criteria of skills and expertise, the criteria of diversity, real diversity of thinking, more than anything else. That's where the value is, and that's where the richness in the conversation, the dialogue, and the healthy challenge is. I think those are super important. And then align values clearly, and especially if you're starting your business, you don't want to have to be fighting with the people on your board, advisory or otherwise, on directionality of the world and what your vision is. You need people that buy into the overall vision and that have shared values. And then also it bleeds into culture, the culture that the individuals have and share, and then that is going to ultimately be transposed into the organization.
Yeah. No, you've raised some really important points. If you could go to the next slide. You do want, and as I'd said earlier, you don't want wallflowers, but you want a board that buys into your vision. You have to have a board that buys into your vision, or it's not going to help you to move anywhere. You want to have a board that's going to be able to help you with risk management, so looking at the composition. I think, Marie-Josée, you raised a really important point. Culture is so important. You want a board that's going to be able to work well together, that they're not at each other's throats. And believe me, I have seen it, where you have boards that are at each other's throats and you just don't get anywhere. And it's really important when you're thinking about building the board. And the second thing that's really important around composition is a good chair. You want a chair that's going to be able to manage that difficult board member, that's going to be able to ensure they engage all board members, and that's going to be able, frankly, to manage you and to be able to push back on you and kind of say, yeah, not where we really should be going right now. So now we're getting 2 minutes out to the end. I am basically at the end of the slides. There are a few at the end that aren't necessary. Was there a question?
I'm not seeing any.
Okay,
maybe people want
to. Where do your directors come from? Again, there's a variety of things. You're going to be small organizations, so using search firms is going to be a challenge. That can be very expensive, and often their focus is on larger companies, so they don't even have directors who would be appropriate for your firm. So don't underestimate word of mouth. Just letting people know we're looking for board members. This is the kind of board members that we're looking for. I'm on a not-for-profit right now, as I mentioned, a fairly significant one. One of the board members went to both of her daughters, one who's a doctor and one who's a lawyer, and said, can you just pass the word around your companies? And so we ended up getting a really good real estate lawyer that we needed from the law firm and a psychiatrist from the hospital. So just getting that out there is really important. Also, there's a bunch of sort of director registries and things out there. The ICD, where I work, we have a director's registry that's quite cheap to use, and that you can get some, experienced directors that way. And there's a variety of those out there. Women Get on Board have one, other smaller groups. Also, never underestimate LinkedIn. When you post something on LinkedIn, you'd be surprised at how much it gets out there. And also ensuring that you're posting on things like professional organizations, CPA organizations, legal organizations, engineers, their associations and institutes are very good. So those will be very helpful. Now I have a few more slides, but actually I've sort of gone through everything that I want to get through. Any questions or comments now that we're at 3:30? I've got a few extra minutes, so.
Well, I want to thank you so much, Gigi and Marie-Josée, for all of your time today, the discussions we had, the questions that came in, especially thanks to Chang for bringing in some additional comments and clarifications. That was really helpful. I just want to be just cognizant that we actually are over time. We're just about approaching over time. So thank you very much for everyone attending. We really appreciated it. And if there was anyone in your circle who didn't have a chance to attend this, we've recorded the session and we can share that out. And Gigi and Marie-Josée have given us permission to do that. So their contact information are on this last slide. And I just thank everyone for coming. Thank you very much. And I'll just ask Gigi and Marie-Josée to stay on with Philin and I afterwards for a few minutes. Thank you so much.
Before we hang up, we've got some great questions, and I will try to send the answers to UBC and deal with that way. Thank you, everybody.
Thank you.
Thanks
for having
everyone.
us.